Hey, welcome back, everyone, to Market Conversations. It's Friday night, and it's time to get some education. So I'm absolutely overjoyed that a dear friend, mentor, and co-collaborator, Mr. Nick Black, will be joining me in studio. We have a lineup tonight that is going to consist of an investor assessment, really super neat little tool that you can use to kind of get a feel for where you are, right? Anytime we're building investment strategies, we want to have a very truthful, honest foundation of where we are so that we can strategically map where we want to go. And as an investor, that's the name of the game. Every day, we're going to try to get a little bit better. And I think it starts with the truth. Now, I'll tell you, for the most part, this exercise is going to be pretty straightforward. However, there are some areas that a lot of us mistakenly miscategorize. And I'm going to bring in Nick. We're going to get into this. So I'm going to suggest that everybody grab a paper and a pencil or pen and walk through this with us. This is a great little tool that I learned from Nick. Something that I think that anybody starting out should use, as well as anybody that's been in the game for a while to revisit on some periodic basis. So let me get right into that. Let me bring in our guest tonight, Mr. Nick Black, host of Crypto and Coffee and weekly contributor on the Raging Bull platform. Let's welcome Nick Black to the show. Hi, Nick. How are you?
What's up?
What's up? Well, hopefully profits are up. When I'm looking at the legacy markets, they're all green. I go to the digital asset space, it's all green. And to me, I think doesn't that ring the bell that the economy is fine, everything is great, go ahead, enjoy your life?
I'd say go all in. I think the worst is definitely behind us. And we're past the bankruptcies. We're at maximum employment. Inflation is negative 700%. I think everything's fine. There's nothing to see here. These are not the joys you're looking for.
Welcome to another episode of Sarcasm Theater. No, it's amazing to me how irrational our monetary policies are, and how irrational the participants in the legacy capital markets, as well as digital assets, act over extended periods of time. Death's highway. So yeah, go ahead.
Can I real quick? I just want to say hi to some of the people that we don't see normally and some that we do. Hi to Mike Shaw. Hi to Bill. Hi to Show Me Your 9009s. What is that? Crawfish XRP. It's rough both as a crawfish and as an XRP holder, but I get it. Lance, of course, Brady, Jacob. Anyway, it's kind of nice to see you guys all turning out to support not only Jerry, but just to support the idea of this kind of financial literacy. I think that's probably what the name of tonight is, right?
Right. Well, I titled this stream in the description of the video, "Luck is not an investment strategy." I think that's so appropriate.
I have this conversation with clients. I had a long one today with a client, and they were explaining to me how they bought something, it randomly went up, and they're like, crypto's easy. No, man. Investing's not easy. Everybody can be made to look right in a bull market. In 2017, everybody was right. Everybody was smart. Everybody had an ICO. No one could do wrong till about February, March of 2018. Then the whole thing S the bed, fell off a table, and then everybody couldn't do right. But it wasn't them. You see, in 2018, it was governments, it was China, it was India, it was too much regulation, not enough regulation. When will they regulate? I hope they don't regulate. Who's going to jail? Who's going to snitch on other people going to jail? It's just like one thing after the next. The one thing I never heard in 2018 was, I think we blew it. No one ever took responsibility. And that's like the worst thing. And so I just, luck is not an investment strategy. It won't save you on the way down, and it won't help you win on the way up because it's not a teachable, repeatable process. When I first got into sales, that was the thing. In order to be good at sales, you can either be a natural or you can have a teachable, repeatable, auditable process. And so I think that's what we're going to do tonight, Jerry, right?
Yes, sir. As a matter of fact, what I thought was a great way to kind of kick this off, because it doesn't matter what level of investment you're at or how deep into the market you are. The simple four-square analysis, and that's what I call it. I call it an investor assessment. And it's something that we can do for ourselves on our own lives. So if we each take the context that we are responsible for our own balance sheet, well, how do you know what your balance sheet is unless you get it down on paper? It's one thing to go through different deals in your head. It's a whole other thing to break it down on paper and really scrutinize it. So I thought that would be a fun way to kind of kick this sucker off. And just let me throw it to you. What is your interpretation? What is the best value of this four-square thing? And then let's actually do a four-square assessment.
For sure. Let me real quick just address, Brady had asked, explain us how unprepared traditional market is regarding crypto and the ridiculous gains. I mean, I would say that the traditional market, if we're going to say that the equities and the bond space, I guess we throw in the gold guys too. So we'll throw in the traditional commodities and go ahead and throw in Forex. I would say short of a government collapse, nobody was prepared for 2017. And even the people in the crypto space weren't prepared for it. So none of us. And my brother was in 2012. I didn't even start looking until 2014, like early 2014. But I didn't own anything until, mid to late 2016, probably. Mid fall of 2016. Anyway, none of us had any idea what was going to happen in 2017. And no one can tell you that they knew that was coming. No one. Because we went into this crazy, insane place where you were making, 8, 10, 20, 50% a day. I went from, this is not really a secret. I had most of my money in gold and silver because I'm a gold and silver trader, and I was in the gold and silver business, in the refining business, in which I still consult. And I took $7,200. I think it was like 3 or 4 ounces of gold. And I converted it into Bitcoin. And that's how I started. And then I broke it into 4 piles. I broke it into Bitcoin, XLM, XRP, Ethereum. And I thought I had missed Ethereum. I thought I was going to win on XRP and XLM, but I thought I had missed Ethereum. And it's already like $35. It's all I missed it. $35. Rotate that clock to the end of the year. That $7,200 account was, over Christmas, it was $976K. I'd been taking money to the sideline. I didn't know what the fuck was going on. It was so irrational. I felt like a drug dealer. I felt like a weapons smuggler. I had to start lying to people about where it was ridiculous. So I was like, this is crazy. This doesn't make any sense. Even I started to question, I was happy, woo, look all this money. And I started going, wait. Where'd all this money come from? How is this possible? Well, it was possible because we were at peak retard status. Everybody was crazy. Even the people that should have been sensible were being crazy. There were 1 or 2 voices out there. And this is where I give Novogratz credit. He was one of the few people that said, calm down. Calm down, everyone. And so I started thinking, okay, maybe he's right. And I made my first purchase. I took 1 Bitcoin at around 19,000. It was a down payment on a car. Me and my buddy started a high-end rental car company, blah, blah, blah. Other than that, I never sold any crypto, and I never have. Not one, nothing. I didn't ride it all the way down in 2018. I started pushing into different assets, and I started saying, I went through my list and said, if I wouldn't buy it right now, I'm selling it. Just period. And so I went from having like 40 different, I bought every old shitty thing you can think of. And I just trained it all the way back. And then I started looking at little strategic plays. And all throughout the year, I was just concerned with like, don't lose. Just don't lose. You don't have to win this year. Just don't lose. Everybody else getting pummeled because they were in these junk coins that had no real intrinsic value. And plus Bitcoin gave a lot back. But you know what? Bitcoin started 2017 at like 789, $800, somewhere around that range. It finished the year at 19,000. So even if it gave it back to 3,000, you're still at a 6x year, 5x. That's still freaking better than anything you're going to see in the equities market. That's not a scam, that's not Nikola or some other, So anyway, those kinds of gains through 2017, they were so irrational and no one was prepared and there was nothing behind them. It was just nonsense, right? Well, this time is different because this time it's not based on nonsense. This time it's based on a little bit of speculation and a whole bunch of technology and a little bit of savvy. And for the first time, we're seeing that institutional entry into the market that we weren't seeing. And if you ever think things are bad, if you're ever worried because the price is down and you're like, crap, man, A, you're not selling today, so it doesn't matter. B, go look up OTC volume Coinbase, OTC volume Kraken, OTC volume Binance. And you'll see how much money is going in the back door of those facilities, out the loading dock in the back. How much money is coming in, right? It's way more than you see in the retail markets just looking at Coinbase. And so I would just kind of urge everyone, I try to tell all kind of my friends is pretend the run has already happened. Pretend you're at $100,000 Bitcoin. Pretend you're at $4 XRP and 89 cent XLM and $6 Cardano. Pretend you're already there, and you need to start looking at what that would mean in your life and some of the decisions you're going to make. You want to make those decisions now, because if you get caught up in all that shit and start buying Lambos like these other dumb fucks, you're going to get blown up and you're going to give it all back. And I don't think we're going to get a third bite at this apple. I think this is it. And I'm thankful that we got another shot at it because I'm much better positioned now than I would have been. And I just think people they're waiting for it to happen to make a game plan, and kind of like what we're going to do, with, setting up our kind of balance sheet and doing a little self-audit. You have to have a game plan before, the door gets kicked in and the cops come in and start shooting. Like, you just need to have a game plan. Otherwise, you're going to get imploded. You're going to get your face melted, and some retard that has 4 Bitcoin on a thumb drive is going to beat you by simply not making a move, right? So you either have a plan or do nothing, but don't try to go in there and fuck with stuff while it's happening, because you'll just get imploded. Does that make sense, Jerry?
It makes a lot of sense. And to have a plan, you always have to have a starting point, right? So for many of us, the starting point is our own personal balance sheet. And one of the things that I've always enjoyed about your content, and it's probably one of the largest takeaways that I've held for myself, and I espouse all the time, is that, I need to get out of being a person who has money mindset and be an investor and have an investor mindset. And one of the little contexts that I've gotten from you that kind of ushers in that those tools and that framework to look through, it's called I'm being the CEO of my own hedge fund.
Yeah.
And when I think of it that way, it's definitely different than thinking about it in dollar terms, being in my wallet, being discretionary funds to spend, right? So this tool, you have brought this up on your show many times, and it's each of us taking a look at our own situation as it plays today. So for the purpose of the exercise tonight, let's start with reality. So for each and every one of you, take your piece of paper and your pencil, or do this in your mind if you have that kind of mind. Brady, I suggest getting a piece of paper and a pencil. Well, because he's busy doing a lot of other stuff in his mind. And we're going to have in these 4 squares a title, right? Each one of these boxes is going to have a label to it. So we're going to have income. We're going to have expenses. We're going to have assets, and we're going to have liabilities. Mm-hmm. That is our personal balance sheet. Some of you represent an entire family. You make the financial decisions, or at least you hold the keys to the finances, and maybe you make joint decisions with your spouse. However that works, write these 4 boxes: income, expenses, assets, and liabilities. Now, Nick, I'm gonna share mine on air while people are doing this at home. And what I'm gonna ask you to do is, like, after I do each box, we'll talk about the box, and then we'll go to the next box and we'll talk about the box. Okay, so all right. So here it is. I've got my income box. My income box is very simple. I have some fixed income products that pay me $350 a month. And now I have an additional revenue stream of YouTube income from this channel that's average. Now, every month it's been different. So I've just taken the total number of months and given it an average. And that average is $192 a month.
Sweet.
That's my total income. Okay.
So for everybody at home, everybody playing at home, the way that I do this is I literally draw a square and then turn it into a minus sign, put a line in the middle. Okay. So like this. Oh no, you can't see it.
No, we can't.
Well, anyway, there's a box with a minus sign. Take a box, cut it in half. Write income up top. Write your after-tax income. Because if you have to give tax to the man, that ain't income. Okay? So in the top of the box, you're going to write and that's income from every area you get it from. If you get it from 5 places, then you need to write that income, that income, that income, that income, that income equals the total. So what you're trying to figure out is, what is the actual cash that's coming in, not the gross, but your net, right?
Right.
Because this needs to be a real number, not a pie in the sky number. Okay. Then beneath that, so that's the rectangle there. The rectangle beneath it, that's your expenses column. Everything that goes out, utilities, car payments, tax, any like home housing taxes, HOA, anything that goes out the door, all of it. You got to be honest about this number. Every little thing. If you give the dude on the corner $6 every time you drive by, put it in. $6 times however many times you drive by. We need to see exactly how much is coming in and how much is going out, right?
So let me walk you through that.
Sure.
So in my expenses category, in my expenses box, I have one fixed expense that number doesn't change, and that is my rent. Now, the rent on my studio is all encompassing for electricity, water, garbage, cable, and internet. So for me, I'm lucky. It's one fixed cost per month. That's $200.
Okay, so that's expenses $200, right?
Expenses are $200 for rent.
Okay, so that's rent. What about food?
Now, that has varied. And one of the things that I had to do, and this is it's so remedial, right? For me, it felt like my mom had to tell me, okay, I want you to keep a receipt for every single thing you spend money on for this week. And I did that. I looked at it at the end of the week. I saw how much I totaled it up. And then I went back through and by itemizing, looking at each single item and going, was that really necessary or was that not necessary? You know, just like you folks up there in the States enjoy your really nice kind of plush coffee shops and things of that nature, we have one down here. And there was a time when I first came down here that I enjoyed going to the coffee shop and girl watching and, you know, sipping on a coffee and just kind of enjoying the internet and, you know, whatever.
They call that stalking in the United States.
Right. Well, they don't have a word for that in Espanol, thank goodness. Anyway, so I went through the week and I went, okay, so these were my expenses, and if I continue to do that at the end of each month, I will exhaust the other $150 that I have. However, and this is where I kind of had to put on my investor mindset, right? I had to put on my investor hat and go, okay, I looked at every single expense, all these discretionary spendings that I was doing using the $150 that I have each month. And I went, well, if I don't spend that $1.25 there, I can literally achieve the same purpose with 25 cents at my house.
Right.
Okay. Well, let's project that out a little bit. If I do that over the course of a week, then 2 weeks, 3 weeks, a month, a quarter, etc. Now I could start building, and I just took that premise through every single line item of all my expenses, and I was able to lean out my expenditures, and it actually allowed me, and this isn't a lot of money, but it allowed me to start investing $25 a month.
And just real quick, Brady, so you have income on top and you have expenses right beneath it. And correct. So just to keep track, Jerry, so for all the people playing at home, so for income, you had a total. What was the total on your income at the after tax?
Okay, well now it's 350 plus 192.
Okay, so 542.
Yeah.
Okay.
Well, no. I'm going to the calculator because sometimes when I do stuff in my head, it isn't good. It's 542, exactly what you said.
Got it. So we're going to put plus 542. Obviously, you guys are going to do your own number, but for the sake of this one. So we got 542 coming in. We've got right. 200 leaving in rent. And what was your aggregate on food?
It was 140. And now I've got it down. I've actually got it down to 125.
Okay, so let's take the 125. So we're minus 200 for rent, minus 125 for food. Do we have any other continual expenses?
No.
Okay, that's good.
I mean, all the folks listening at home are probably going to have a completely different setup.
Of course.
Before I retired and moved down here, I had a completely different setup. You know what I mean?
Yeah, but for the sake of the drill, this is good for people to go through the practice. So right. On the top, you have income underneath it plus 542. On the bottom, you have expenses minus 325.
Correct.
Okay. Do some math there, Jerry. What does that give you each month in disposable, investable income?
197.
197. So guess what that is, folks? That is your cash flow.
Exactly.
So you can write it out to the side. You can write it on the bottom. You can write it wherever. But his cash flow is 197. Let's make it $200. Keep it clean. So I write cash flow. $200. Now, one should not invest their entire cash flow. We'll get to that in a second. But you need to understand that part of that is investable. Part of that needs to go into savings. And part of that needs to be somewhere in between, meaning it's some cash that you have hopefully doing something for you, but if you need it in a pinch, you could get it. The average American has $400 or less in savings. And that's living over here on the mainland with all the bills we have. That right there is atrocious. So be careful, okay? That means you're one paycheck away from being on the food line, and that's no good. You don't want to be that close to the edge of the cliff. So the idea is when you audit this stuff, you start to buy yourself a little bit of freedom because you know, okay, now I know where I am. You couldn't go take a vacation and go to the airport and you're like, I'm here. They're like, what do you mean you're here? You're like, well, I'm going on a vacation. Where? I don't know. Well, okay, figure out where you're going first and we can get you a ticket. So this is what we're doing. We're trying to figure out where we are right now. What's our location? Income, 542 on the plus. Expenses, minus 325. That gives about 200 a month. Okay, now we're going to draw another box. We're doing the asset and liabilities box. Jerry, what's that looking like?
All right. So in my asset box, I have, and I'm going to take this number straight off of Blockfolio because I'll just give you the whole thing. So the first box we go to is Blockfolio. Blockfolio says I have 57,882 US dollars in assets, which are the XRP, Cardano, VET, and Bitcoin.
Okay, so the way I do assets and liabilities, just so you know, is I do a rectangle, and then this time I cut the rectangle in half like this. And I do assets over here and liabilities over here. Okay, so this box is like this. The other one was like this. You had income, right? Income over expenses. Now we have a box like this. You can put it right underneath. We break it in half like this. Okay, assets on one side, liabilities on the other. His assets are 50K and change.
57, almost 58K and change. Let's not change the old guy.
Snap.
That's digital assets. And then we go to the traditional capital markets and thumb ID. I got to do my thumbprint for ID purposes because I'm all about security. And Charles Schwab says I have $3,315 of assets.
So that's going to put us close to. Is that all your investment stuff? So let's give it a cool 60K.
Let's do it. I'm cool with that. We're rounding.
So we're 60K plus 60K on the assets. Okay, property, vehicles that are paid off, anything like that. What else do we got?
That's the thing. So I am divested of stuff. I own £400 worth of stuff. That's clothing, my laptop, my tablet, my router. It's just stuff. The great thing about it, Nick, I no longer have liabilities. So I have no debt. Every single loan is paid and I've moved away from that lifestyle.
Well, not so fast. You might be sitting in a liability right now.
Sitting?
Yeah. You're in a home, are you not?
I'm in a studio apartment.
Do you rent it?
Yes.
That's a liability.
Oh, I thought it was an expense.
No. What happens if you go take a hammer and go hammer that wall? What happens if you smash a window, mess the door up, the AC goes off? You're going to be liable for part of that, right? So I would just say that's a potential liability. It's definitely not an asset, but it's not clear cut that it's not on the sheet. And I know that some of you will say, well, what about in the expenses column? We had the rent. Yeah, but I'm guessing that in a year's time, there's some amount of money you put into that place for upkeep and things like that may not be part of the expenses.
I think the only real upkeep I've done is I did buy a Lazy Boy chair, a recliner.
Okay. So we'll just say that was melted into the expenses. So in your case, you're pretty clean. That wouldn't really be a liability because you're not having a lot of upkeep. And okay, but for those of you that are sitting on a home and you think that's an asset, unless you're renting a room out or many rooms or all of it and it's an Airbnb or unless you're monetizing it, move that son of a gun over from the asset side to the liability side. If you have a car, even if it's paid off, it's not an asset. It's a liability, right? You have to put gas in it. You have to put oil in it. You have to go get it inspected once a year. You have to pay registration. You blah, 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 blah. You may have to pay to park it. It's a liability. Now, some of those things that I talked about are probably gummed up in your expenses category. And if that's the case, fine, but it's still a liability. You can't just close your eyes and forget about it. You have to maintain it.
Or think that if your car, just because your car has like a blue book value, let's say you have no loan on the car.
Right.
Well, let's walk one step. Let's say you do have a loan on the car, or you do have a loan on the motorcycle.
Right.
Then they're absolutely 100% liabilities.
It's in the liability category. Right. Now, the expense, the month-to-month expense is probably going to be, it should be in your expenses category. However, that vehicle is a liability versus an asset. If it's non-performing, it's a liability, period.
Rent is an expense, Lori, for the most part. For the most part, rent is an expense.
Yeah.
Okay, I'm sorry. Go ahead.
Yes. Yeah, correct. Rent is an expense. Liabilities are physical things for the most part. You have kids, liabilities. Unless they're out there catching passes on Sunday, liability. You got to put them through school. You got to feed them. You got to put clothes on them. Blah, 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 right? So just be honest. Most people's homes, vehicles, and children, grandchildren, parents, whatever, whoever lives with you, that's a liability. It might not be an expensive one, but it is a liability. Okay. And you're not going to, when we have the asset and liability category, this isn't to determine a value. This is so you know in your brain what's going on in your household. This is what you're looking at your book, and you're seeing what assets are performing, which assets are not, where is the dead weight, what's the cost of carry. And so this is a way to be honest with yourself. You can't lie to yourself on this stuff. You can cook the books and be like, oh no, it's this car. I love it. On the weekends, I go out and drive it. Yeah, that's cool. And there may be some psychological value to it, but for the purposes of what we're doing, it is either an asset because it makes you money, or it is a liability because it doesn't, right? Where you get tricky, and this is where you can kind of play it, is a bar of gold. It is an asset. It's a non-performing asset for the most part, but you know there's money there. So that would be an asset that has a liability function to it because you have to pay to maintain it. In many cases, you have to pay deposit fees, or you have to hide it, have a safe and all this kind of stuff. So again, that gets in, you can really dig deep and you can see, man, how much stress is it to maintain this asset? Rather than this asset performing, am I performing for it? Am I the dividend, right? Like, am I the one going after the extra work? And so that's why, it's another reason why digital assets are so appealing, because the maintenance of those assets is very minimal and it's very safe. So it's just another thing. And yes, it's cool. Mike, your kids, they probably are amazing. Everybody's kids are amazing, except Jeffrey Dahmer's mom's kid and Ted Bundy's mom's kid. Those kids were, you know what? They were also amazing in their own way, but they would definitely be liabilities. So not only to the parents, but to society. So you just have to be, this little 4-box study here is what everybody needs to do. Okay. And when you do this and you look honestly, you're going to get a number at the end. But the other thing that you're going to get is you're going to realize the things that maybe you thought were assets, maybe they're liabilities. And then you start going, well, how could I make some of these assets perform for me? Right? So you could say, well, maybe that car, I could start sending it out and renting it. That's what I do. My buddy and I started this just as a way to drive exotic cars for free. Now it's a business. We got 30-something cars, right? Way more cars than we should have. It shows you that the whole credit thing's blown up. But anyway, so we turned those from clear liabilities, like cash sucking, choking, debt creating, into assets. They not only pay for themselves, but they pay us. So they pay for us to own them. I rent the condo that I'm at. I don't own it. I do own a piece of property in Texas, but I rent it out but it's not much more than break even. Honestly, it's probably a psychological liability. I rent it out for enough for upkeep and to pay the bills on it. So that's probably, if I'm being honest with myself, that's more of a liability. You got to be honest. That's the whole point of this exercise. But I took all my vehicles. I rent them all. If I can't, like if all the vehicles are out, I'm taking Uber, which I hate doing, or I'm on one of those little scooters, risking my life because I'm cheap. I have my crypto. I have just a tiny enough bit of cash to get by. Every in my opinion, Bitcoin is my stable coin, like I say to a lot of people. So I take all of my available free cash and I push it into Bitcoin, and then I immediately sell options against the Bitcoin because I even want my free cash to be performing. So the interest rates that banks no longer give us, I just make them on my own. Brady and I were doing that today, as a matter of fact. So anyway,
I think that really brings up a really good point. That's another thing that I started to learn. So as I have gone through this journey of kind of becoming financially literate, right? Or at least on my way to becoming financially literate. And I look at the deterioration from a perspective of purchasing power in the US dollar. And I think to myself, even in short terms, like 1 year periods of time, 3 to 5% or 5 cents on every dollar, it starts to add up. And when you are like, I don't want to say myopic in my thinking, but really I'm laser focused in understanding the limited amount of money that I have to deal with. Am I maximizing my ability to, garnish some of that into creating wealth in the future? And so with that mindset, I think to myself, well, if cash is losing, 3 to 5% a year in its purchasing power, then I want to be in an asset that has the opposite effect. I want to have some kind of appreciation over the course of a year, not depreciation in the value, right? So I've started doing exactly the same thing. That is, every extra dollar is going into Bitcoin. And that Bitcoin, I'm not doing what you're doing yet as far as the complex trading element for options. I'm doing the kind of the easy, the Bitcoin goes onto Nexo. Nexo pays me an interest every single day. I get a little bit more Bitcoin. And that to me is, has two key elements. One, it is easily liquidated. So you talked about most people don't have savings, right? Most Americans are in that $400 to $500 in their savings account kind of savings. Well, I got over a half a Bitcoin saved, right?
Yeah.
To me, that's savings. If I need, I'm not married to the Bitcoin. It just seems to be a good tool to park some cash and earn some interest that I cannot get anywhere else while, until something happens where I absolutely have to have it. And if I do absolutely have to have it, the thing about Bitcoin is that the market is so liquid. And you never really wait. You know what I mean? There's very little wait time to sell Bitcoin. Bitcoin gets bought very easily.
Yeah, well, it's extremely, even though the crypto space is rather illiquid, right? Kind of the mantra is illiquid exchanges with illiquid assets in a wholly illiquid market with sketchy investors. But among that, Bitcoin is the liquid king, right? You can get in and out of Bitcoin 24 hours a day, 7 days a week. You can't do that with dollars. No. And dollars are everywhere. You go to your bank, try to go grab at 7:56 at night. Go try to grab $250,000. You get nothing is what you get. You get $300 out of an ATM and a little receipt that says go F yourself. And if you go into the bank on Monday and ask for that kind of money, you're going to get a finger up your ass and a bunch of people asking questions you don't want to answer. And one of the reasons I like to go, like I go to Bitcoin and all that, is because I just have a distrust for the whole way banks are set up, the whole way that they prey on people that can least afford to pay. I mean, I don't know if you guys know that Chase Private Client just sent out an email to all their private clients. So with private client, you start a private client account at Chase with $250K, and they give you all these benefits. What are those benefits? I don't know, because I've never seen them. You get to go into a lounge and have fucking coffee or something. I don't know what it is. But anyway, you're a private client. They're so cheap now that if your private client balance drops below 150K, which it's not nothing, right? 150K is 150K. If it drops to 149,999 bucks, they're going to charge you a monthly service fee of $35 to maintain your status as a Chase private client. Jamie Dimon, fuck you. Right? And so it just bothers me the way banks operate. They prey on the poorest people. They prey on people that have the least ability to pay. Chase and the top 4 banks last year charged over $1.5 billion in these $35 fees that they pile on people that can't afford to pay. And so just that whole business model is shitty. And it is.
But for the purposes of keeping rants to weekdays between 10 and 11, we will jump into here. I saw this from Steve. He says, I have most of my XRP invested in iTrustCapital and plan to use profits from my exit plan as XRP goes up and to put it into Bitcoin and gold. Also own crypto. Now, here's the thing, Steve. If you are in a self-directed Roth IRA, you aren't, there is no exit plan. You have no exit plan. I want to be very clear about this. If you are in a self-directed Roth or any IRA, unless you are willing to pay fees, you're not touching that until the age that it says you can touch it. And I think most of these are set up at 58 years old. So there is no exit plan for you until you're 58. You can trade within the account and do all the stuff that you say in there, but there is no exit plan. Roth IRAs are not an exit strategy. They are an investment vehicle.
They say, Jerry, American Express, the motto is don't leave home without it. And Russian Express is don't leave home.
Don't leave home.
Don't leave home. And so that's the same thing. If you
So we went through the 4 squares. And that's a great tool that any one of us can use. I think one of the most valuable things that I've taken away from the 4 square exercise, and I would really like to get comments from the viewers that are watching this. But I'll tell you some of the benefits I've got from it. One, I do a greater focus on my actual day-to-day spending and started analyzing, was what I was actually spending money on a daily basis really adding value to my life, or was it just spending, right? It's that whole difference between putting money in a market thinking you're an investor, but what you're really doing is that you're putting your money in assets that truly are just gambling vehicles. You know what I mean? There was no real tangible study done and analysis done with a in point and an out point. So therefore, I'm just kind of rolling dice. I threw some money at something, hoping it goes up so I can make a profit. Yeah. That is that whole luck as an investment strategy. Well, when I'm thinking about my expenditures, what I've done is I've kind of taken that adage from Nick Black and I put on the hat that I am the CEO of my own hedge fund. And it's not just me I'm responsible for. I'm responsible to all of the investors who've invested in my fund, which to me, I look at as they're my children and my children's children. They're the partners in this fund, and I have to answer to them. It's just a little mind thing that I do for myself to kind of say, Jerry, it's not all about you. You're doing this for a purpose greater than yourself. Well, when I have that kind of context, I'm thinking to myself, okay, am I bringing value to them by buying a $4.50 Starbucks? For me, the answer is no. When I can make a 50-cent cup of coffee at home, I can have the same exact thing, get the same exact effect, but not take money that could be better used to invest and put it in and pull it into today. And I think the same thinking goes for folks that take out credit or use credit, who carry credit over month to month, who make minimum payments on their credit cards.
Like the federal government.
Exactly like the federal government. We are not the federal government. We will be penalized dramatically if we deficit spend. Unlike the government, who can deficit spend year over year over year. And as long as they've got the biggest Navy and Army and military in the world, not a whole lot of negative consequences are going to, well, besides the military, you've got the fact that the whole world trades oil in your currency, and 72% of all debt in the world is denominated in the US dollar. So, they kind of have the ability to act a fool. Cannot. We do not have that luxury. So we are getting close to, Nick,
Yep.
I'd like your thoughts. I'd like you to expound upon the whole being the CEO of your own hedge fund. That mindset of looking at your expenses, your income, your expenses, your assets, and your liabilities, and putting on the hat that you are now the CEO of your hedge fund, and performance matters.
Well, I would say the first thing you can do if you're just looking at your cash flow, because let's say we've reduced everything to cash flow, and now, okay, I have X amount of dollars. Let's say we have the $200 extra a month. I would say it's fair to do 10% of your investable disposable income, right? So that's your investment, right? 10% of your disposable income you should put towards your future. The bigger a chunk of that disposable income you're willing to put towards your future, meaning the more you're willing to pleasure delay, the better your future is going to look. Because if you go back 10 years, $1 in Bitcoin looks a lot different right now. 10 years ago, $1 in Bitcoin was $1 worth of Bitcoin. It was between 1 and 6 cents. You had between, 100 and say 15 or 16 Bitcoin, depending on where you got it, right? And then you fast forward. So I think of that. Listen, every dollar I can put in now is probably $2 to $3 next year, $6 to $9 the year after that, $18 to $36 the year after that. You see how this can go. And so if I have disposable income right now, I'm going to build my rainy day savings, but I'm going to put every cent that I don't need to spend on something, I'm going to put it towards my future. So I'm going to invest. The next thing is you have to look at the assets inside your investment portfolio. And this is why I was kind of reading back and I was looking at Stephen's comments. And so I guess what I'm curious about, Stephen, is, and this is a bit of a double meaning, but what's your plan B? Meaning, if it seems like you're heavily weighted into XRP, which is cool, but remember, belief is kind of luck, right? You can believe in something all you want, but I would just be careful that you're not putting your eggs in one basket. And if XRP doesn't, I'm not saying it won't, it could. But if it doesn't perform the way you want, would those funds have been better distributed into other areas where perhaps they make more? So, for instance, could a little bit of that be in Cardano earning 5.1% plus the asset appreciation? Could a little bit of that be, or more than a little bit of that, about half of that, be in Bitcoin, where it could either earn the easy money in like a Nexo or an Uphold, Cred, whatever, Bitrue, whatever platform you put it on, or a little bit more in the options market, taking that Bitcoin and levering it up 1.5, 1.7, 1.8 times, right? So I think managing your own hedge fund, which we're all doing, every one of us have our own hedge fund. And if you're going to do that, you got to be honest about the stuff that you own, okay? And you got to make sure that you're not overweight in certain assets. because of belief, because of hope, because of dreams and whimsy and alchemy and fairy dust and snake oil and fucking potions. You need to be very shrewd about how you look at your assets. You have to be honest with yourself. I made most of my money with XRP and lumens. I now own this many lumens because I don't think they're going anywhere. I think they have no leadership. And I'm not going to get into a whole dissertation about the tokens, but when I had made the decision that that money would be better somewhere else, that's it. I cut it, gone, I'm out. I have a pretty big position in XRP that I scaled back pretty considerably. I pushed into Cardano and Bitcoin. The Cardano's performing at 5.1% plus asset appreciation. It started the year at 3 cents. Even at 10 cents as it is today, that's a pretty good year. So I made that XRP become performing. I still hold a bag. I'm looking forward to the Spark token distribution December 12th. And guess what I'm going to do? Unless the story has changed, and I would go and buy it right now. And that's what you have to do. You have to look at all of these assets and you have to say, would I buy this right now? And if the answer is no, you got to decide, should you be in those assets? Cool. No, it looks like you got good stuff. Cardano, VET, XLM, and try to monetize these assets. But just be careful. And this isn't just you, Steven. I was just using you because you're the only one that posted what you had. But I want you guys to look at your game plan if your favorite token completely falls off the bed and breaks its neck. If Charles Hoskin turns out to be a drug lord weapons trafficker for the Russians, this whole thing was a scam and it's over. Are you going to be okay? Is the rest of your balance sheet going to be okay? Right? If Bitcoin gets hacked by the Chinese, which I actually expect it will, and gets blown up down to $1,000 a coin, are you going to be okay? Right? So just do that kind of self-search, that self-discovery. If you do, and we all have to do it. We all got to do it.
We all got to. Well, the whole purpose of my show, truth be told, in all honesty, is for me to attract people that I can learn from so that I become a better investor. And in the process of doing that, I get to share that with others. Now, over a course of time, it's attracted 4,000 subscribers. So there are 4,000 people out there that thought, you know what? I want to take that journey too. I want to be a better investor, which leads me to how we end every show here on Market Conversations, where we bring in our investor from the street, our Instagram correspondent, Bitta Avenue. Bitta, welcome. I'd like you to introduce yourself to Nick Black, one of my friends, mentors, and co-contributors.
Awesome. How are you guys doing?
Wonderful.
Happy Friday.
Happy Friday. Now, Nick, Britta always brings great questions, not only from her own perspective, but from her audience that she's attracting on Instagram, who are all very new investors also. So,
cool.
Britta, I'm going to give you the show. This is you are now the. Hang on, let me swipe you over.
Oh, here we go.
All right. So you are in the hot seat, young lady. You've got the guest at your disposal. Fire away.
Well, thanks, Jerry. Well, I'm a new investor. Well, I don't know if you would still call it new. I'm new to the digital asset world, and I invest in, it sounds like we're all invested in very similar projects like the XRP, ADA, and things like that. So my question, I guess, is, since I'm a little skeptical of the stock market, even though it's doing great, and of course you have to diversify and things like that. For somebody that is just now getting into investing, would you still recommend that they invest in the stock market, considering it's overinflated, in my opinion? But would you recommend that for new people?
That is a very good, fat, loaded question, because everything you said is right. It is overinflated. but it's still the place where people park their money. And there's still plenty of room to go because you don't want to confuse the equities market for the real world that we live in. Those things are completely dislocated. So as long as you get that they are not related at all. And there is this effect right now called passive indexation. I'm just going to keep it real simple. And essentially means that the more and more people that lean on these index funds where you give them $10 and they just spread out that $10 into a bunch of stocks, and that keeps happening and that keeps happening. What happens is, since they buy a basket of stocks, and a lot of people are just like, I love autopilot. I just want to give Vanguard my money and not think about it. I'll get in the big high risk fund or the tech fund or the emerging market. Anyway, we love to not think about stuff. And so passive indexation is becoming this behemoth. Right now, those types of funds make up about 40 to 45% of the market. When they get towards 50, they'll be so big that they will become the market. The problem with that is, and that's why we have this where the stock market goes up and you look outside and there's 17 homeless people where there was 3. And you say, I don't understand. The whole world's coughing their lungs up. Why is the stock market going up when everything is imploding, right? And so, but you say, okay, there must be some mechanism by which this is happening. And that mechanism right now, it looks like a big contributor is this passive indexation effect where these funds are just pouring money and every dollar that goes in just pours into a variety of assets. The problem is they're basically become the only buyer in the market. Okay. What happens when you and me and Jerry and Brady and Lori and Bill and Mike, we all go, I'm going to take some money out. Then the only buyer in the market becomes the only seller in the market, and there's no buyer left. There's no marginal buyer. So when only people are buying, of course, prices escalate up. They gap up because there's nobody to bid against. It's just, I have to buy. Every dollar you put in a fund has to buy something. But when you pull money out, they have to sell that moment, that second. And all this is programmed. And I say all this because you want to understand that there's a mechanical dislocation to, not only is there a dislocation in that the world we all live in is not the world of the equities market, but there's a mechanical reason for many of these things that you're seeing where it just keeps going up and it doesn't make any sense. Well, that's one of the big reasons, but that can flip on a dime. And so, would you still invest in it? I won't.
And I have a kind of a street level answer for your question, Bitta, and it's simply this. If I had $1 and it's going to be put into an investment, do I want to put it in something where that dollar can turn into $1.05 or $1.10 next year? Or do I want to put it in something where that dollar can turn into $3? Well, here's the thing. If I look at capital markets today, and it doesn't matter if we're talking about gold, silver, stocks, bonds, real estate, none of those traditional asset classes have the percentage upside gain that the digital asset space presents. And it's because of a simple premise. It's called orders of magnitude, or the laws of big numbers. The stock market is already so large for it to gain 100% it's almost impossible. It can keep incrementally going up 3, maybe 1, 2% a week, that type of thing, but it won't make any very large jumps. You understand what I'm saying?
No. But if you had to invest in only 2 things, meaning like, let's say we're going crypto and the metals, or crypto and the stock, which way would you lean towards if you're new?
If you're new, I would say you don't choose. You break your investment into 3 parts and you get exposure to all of it.
Yeah.
Because don't try. You can be, especially as a new investor, you don't have to pick the winning horse. You can put a little in each basket. Cryptocurrencies perform so well that even a small portion of crypto can outperform. They have this asymmetric possibility where they can just skyrocket so fast it's nosebleeding, but you don't have to put all your eggs in that basket. So I would say have some exposure to equities, a very small handful that you trust, products that you, whatever, however you find things that you like to buy. I had a dream. Somebody told me to buy Coke stock because everybody drinks Coke. It's kind of hard to argue against that, right? So if you're in the equity space, you buy things that make sense to you. No one can tell you how to sleep at night except you. So if you own things that you're comfortable with, you can sleep at night. And when they go down a little bit, you won't panic. Where are you going to get rich off of buying Coca-Cola stock? No, but you're going to get dividend. You're going to get, and you're in the game. Are you going to get rich buying gold? No, but you have that insurance aspect of it where you feel comfortable because it's unlikely that gold's going to go back to $1 tomorrow, and silver. Are you going to get rich in crypto? Well, actually, probably. But it could also go to zero because it's an incredibly whimsical space. And so as long as you understand the psychological risks of each one, own them all. Just own them all.
All right. How about the 401k? Would you add more money into your 401k? What's your thought on the 401k?
Well, it was pushed on people a long time ago as a way to provide for a future because people didn't understand how to invest. That's when they used investment managers and things like this. But what's happened is they borrowed against themselves. The 401ks, all they're doing is redirecting your money into more of these passive indexation funds. So you don't really have, you have less and less humans working the levers and more machines doing it. And that's good on the way up. And it's rough on the way down. So again, I would treat that as a basket of your investment. If you have forced contributions, like if you're working somewhere and they just take money and put it in, and you can, listen, some 401ks you can get exposure to Bitcoin. So within that, you can kind of manage a lot of that. And that's just how much work you want to do.
Okay.
Let me take a stab at answering your question. You brought up 401ks, but I'm going to direct my answer to all of the quote unquote investment vehicles for retirement purposes. 401ks, traditional IRAs, and Roth IRAs. Now, most of the time, you have some say in where the funds that come from you are allocated. This is where you should do some homework. Because if you do not do some homework, then all of your contributions into those investment vehicles will go where the managers of those 401ks or IRAs direct them to. Okay. So see how much direction, number one, you got to find out how much direction do you have for your retirement plan, and then do some research on the actual companies that you want to invest in for the long term. So if you don't think cars or gasoline is going away, maybe a good investment would be a company like Exxon or Valero that pays a dividend and has a track record of paying a dividend. And in your account, whether the stock price goes up or down, you can be compounding the value of those assets. But you won't be able to do that in a fund. Understand? Not to mention, anytime you're dealing with funds or what Nick said, passive indexation, there are a lot of fees involved. So even if they state they have returns of 8%, well, 4% or 4.5% of that each year could be chewed off the top from your management fees, we had to call Nick Black fee, we watched crypto and coffee, that costs money fee. I mean, you understand, you got to understand these things. So there is no longer just set it and forget it shit anymore. The world of set it and forget it is over. You have to know what you're dealing with.
And Bita, one more thing I would say is when you look at something that you're going to invest in, especially these big funds and stuff that look really confusing and nebulous, sometimes it's not worth the anguish, right? I tell people to narrow their focus in investing to 5 to 7 things. Period. In crypto, for those of us that are heavy in crypto, 5 to 7 assets. Because your brain, you just can't follow that many. It'd be like dating 5 to 7 people. That would be a lot of work. And
Right.
it's so much, but the thing is, with your investments, you need to know them as well as you know someone that you're about to date. You meet someone, what do? Go hit their Instagram, make sure they're not a creep. Go look at their pictures, make sure there's other people in some pictures, make sure, do your due diligence. You better know your investments at least as good as you would know the person you're dating. Because if you don't, you're not going to understand when there's some big sea change. You're going to wake up on a Monday morning and you're like, oh my gosh, I don't understand. Why is there like half of my money's gone? What happened? So in order to be in control of your assets, I really do think you should streamline your thinking. And I think that you diversify only as much as your brain will allow. The whole idea is not to be in so many different things that you never go anywhere with your portfolio, because half of it's up and half of it's down. Well, if you're going to do that, just keep the money in your bank account. So you want to find things that you believe in, and you want to take ownership of your investments, and you want to know them well enough to date them. And if you do that, I think you're going to know those assets, whatever they are, even if it's random things, you're going to know those random things better than the person next to you. And in investing, you don't have to beat the whole world. You just have to beat 50% of the people. And if you go look around, 50% of the people are stupid. It's very easy to be smarter than just to be 1% smarter than the people around you by just simply doing research. And that's the one thing that most people aren't willing to do. So narrow your focus, do a little bit of extra research, have fun with it. I think you're going to win. Over time, you're just going to win because you're going to know those assets.
Okay. And the other questions that I have is, I don't know if you guys follow Warren Buffett too much, but how concerning was it that he started, well, I don't know if you would call it dumping, but like getting rid of a lot of the bank stocks that he owns and then moving into investing into companies that are going into, mining and things like that with gold and things like that. Has that news kind of changed your outlook on what you invest in, or like how has that affected you, or does that even matter?
I think, to me, I won't speak for Jerry, but to me, it made perfect sense. First of all, Warren Buffett and Charlie Munger, I don't agree with everything they do, but they are very intelligent investors and very shrewd. And so we can't dismiss their track record. It's pretty impressive. And in 2008, late 2007, when we started the great financial crisis, everything changed. And when the Fed came in and did many of the things they did, the most devastating to the banking industry was flattening the yield curve, basically flattening interest rates. The problem is they did that for many reasons. It's kind of like you owe a bunch of money on your credit cards, so they flatten your credit card payments to something really low that you can, hopefully you can pay for. Because the worry is if it gets up here, you can't make your payments and then you go into default. So what do? They just flatten the interest, but with a variety of tools. But the problem with that is they made it where banks can't make money. There's no money in loan origination. There's no money servicing debt. We don't have a free market anymore. And when you force that, you not only do you take away price discovery or these natural markets, and you take away inflation indicators and all these kind of things, but you take away banks' ability to make money, which is why they do the crappy things that they do with the fees all over the place and all this. Banks are for-profit businesses, right? And if you take away their profit, the way they borrow cheap and they loan and they collect the spread. And if you take all that away, there's nothing left. And so, of course, if you're a Warren Buffett or you're a Charlie Munger and you're looking at your balance sheet and you're saying, guys, this is dead weight. And you have the Fed come out and say, and by the way, don't think that Warren didn't get a little fucking nod from Powell, that they're going to flatten rates until 2026. That basically tells you that if you're not a bank that is in bed with the Fed or has huge private liquidity, you're done. Because there's no money. There's no money left. If rates are zero, how do you make money servicing loans? It's not even worth it. That's why it's so hard for an individual to go get a loan. You're like, hey, I want to take advantage of these rates. They're like, no. Like, what do you mean? But Powell said we're at or near zero rates until 2026. They're like, not for you. For you, it's 4%. For a private equity firm, it might be zero, but not for you. And so that's the thing. There's no money left in banking. So I think Buffett and Berkshire Hathaway looked at that and they're like, this is dead money. So let's make it more performing. Jerry, what do you think?
Well, I'll tell you, I'm not going to, I think you nailed it on that, Nick. And so what I could add to that answer is, bit of what you brought up was the value of understanding, and we use this term all the time, but we don't define it, understanding the macro, right? A macroeconomic view of this is looking at the big picture. So, for instance, if very large pools of capital, which Warren Buffett and Charlie Munger represent a very large pool of capital, if they are directing that capital at something, there's some good reason behind it. Very, very much worth investigation, right? Just like it's valuable to understand demographics, right? If you understood that the largest population on the planet that accumulated the most wealth of any other generation, which we call the baby boomers, are now getting and have started to get into that stage of their life cycle where they're no longer net contributors to markets. They're going to be net divestors in these markets. So they're going to be selling assets, not buying assets. They're not going to be buying new cars, new televisions, a larger home. As a matter of fact, they're going to be selling the larger home and moving to smaller, easier to keep up places.
Right.
That's the macroeconomic view. And so your question spoke to me in that regards. Yes, it's important to understand what Warren Buffett's doing, but that's just one piece of the macro picture. There is, what are all 60 and older people doing? What are people between 60 and 40 doing? How many of them are there? What are the millennials doing? Where are they spending their money? How much money are they making? How many of them are there? This is the demographic element of macro that we don't spend a lot of time talking about. But it's definitely has an impact on the economy, will have an impact on stocks, will have an impact on digital assets. It'll have an impact on everything we do, because that is what an economy is, right? Is the participants in the society exchanging value. Right?
Right.
And if I
so
could
I hope I got to add something to Nick's eloquent description of your answer.
And Bitrue, one thing too, just to throw this on top of that, Warren Buffett and his team, they got sweetheart deals on most of those banks in 2000, between 2008 and 2012, when there was, obviously restructuring of the mortgage market. And after, the great financial crisis, he got a call, which this is all very public. He agreed to back several banks with his own cash at these very sweetheart repayment deals that the U.S. taxpayer took on via the Fed. Anyway, he got a sweetheart deal. So he's in the money, and they probably over the years saw that dwindle, that position start to dwindle. And they probably just got to the point where they said, now we get out and still maintain some kind of profit. So it may look like a panic, but for them, it could have just been a simple trade. You bought X at $3, it went to 12, but now it's starting to come back down. Okay, it's at 6. I'm out. I still lock in 100% profit. So it could be something as simple as that. And as to Jerry's point about macro, one of the cool things about macro is that we all know it, right? You can look around, you can go out on the street, you can see who's buying where are the cars at? Oh man, look at this line of cars at McDonald's, but no one's at Joe's Pizzeria. And oh man, you can see these trends. We all see it. What kind of cars are people driving? What do the used car lots look like? Are they full of cars? Are they empty? What are the new car lots? Are they marking cars down? Like we really do all know macro. It's just sometimes we have to sit back and define it. But especially, I just look at where cars are parked at restaurants, and that already tells me what's going on. Man, everybody's at McDonald's and no one's over here at these restaurants. It's not a good day to be in the restaurant business, right? And then what do you hear? Oh, you hear all these mid-sized restaurants going out of business. Cheesecake Factory blowing up. Regal movie theaters gone. There's a good chance that we've all seen our last movie theater movie. Think about it. Isn't that crazy?
Don't say that. Don't jinx it.
Oh, and it's okay. I mean, the world changes. People that are scared of change, they spend so much time being scared of change, they don't realize that the change is actually net good. It's positive. You need these changes. You need these shifts. Yes, every 100 people that got let out, furloughed, maybe 70 come back to work. That's 30 people that no longer have a job. But that's 30 people that are going to go out. If they're hungry, they're going to go out and find ways to use their skills, or they're going to go back and they're going to re-educate, and they're going to reposition themselves to be that next batch of protected employees when the other people get panned. And so this is all very natural. People used to sew stuff and then the cotton gin, and people used to, make buttons and then button machines, and we're out of work. And, and these are just this is constant. And so I think we all know macro. If we just kind of look around, kind of step back, I think we all know macro.
Right. I could not agree more. Bitta, anything else you got for us tonight?
I think those were the main ones. And then just on kind of to stay on Warren Buffett, just a quick question. I don't know what your when I first started following, him, and then I had seen an interview that he did with Bill Gates where he was talking about Bitcoin is rat poison, or he said something like that.
Yeah.
And that now that he used, well, I don't know if he still owns much of Bank of America, but now that they're investing into all these different crypto projects, and his other companies investing into crypto projects, I just find it a little interesting, and I just wanted to know your thoughts on that.
Well, let me go first. On this.
Go ahead.
It's important to keep in mind that no matter how great your track record is or how respected you are, you're allowed to change your mind. I'll give a case in point. Nick Black used to be very bullish on XRP, used to talk about the professional team, the use cases, the partnerships. Now you can't go to Nick's channel without finding a video where he's saying, fire Garlinghouse, get that hack out of the office, go ahead and move to Singapore. You guys are shit, right? So
they might now.
The point is, everybody is allowed to change their mind with new information, just like you, just like me. Go ahead, Nick. Your thoughts on Warren Buffett?
So, first of all, I've always thought the brains behind Berkshire Hathaway was his partner, Charlie Munger. I've always thought that Warren was the face and Charlie Munger was the brains. And I think he may be, I don't know now, he's like 90,000 years old, but he one of the smartest humans on earth, in my opinion, just as far as, really understanding a wide dearth of knowledge. And so that being said, they stayed away from the tech. They stayed away from the internet, period. Like, they don't use the internet. They don't even track stock. They don't use computers, period. He still gets his information from the Wall Street Journal. And that's okay. But you know what? My grandmother, I have an Oculus Quest, VR. My grandmother won't use it. Crazy, right? Like, my grandmother won't play VR. What's wrong with her? I mean, doesn't she know how cool it is? And the reality is that sometimes there are generational divides that people can't get past. And that's okay, because you know what? They're so good at what they do and the things that they invest in, and, buying the cigarette with 2 puffs left on it and selling one of them and that kind of thing. Like, they're so good at value investing and rebuilding management teams that there's no need for them to change. Did they miss Apple, Google, Facebook, Netflix, Microsoft, Bitcoin, Ethereum? Just go down the list. Yeah, because anything that plugged into the wall, they missed it because it was just a different generation for them. Remember, they're in their 90s, right?
Well, it was surprising because Bill Gates was there too, and he agreed. And considering the industry he's in, I just thought maybe it was like misleading considering what they were doing in the background and what they were saying. It's just like something's not adding up here.
It could be a little bit kind of sour grapes, forget that one thing. And you might point out, you mean the one thing, Bitcoin, that has been the most performing asset in the history of humanity. Like since recorded human time, it's the best performing asset of all time. Well, everybody that missed that and dismissed it for 10 years straight, there's a little egg on their face. So, yeah, what are you going to say, when they say, what about the biggest thing in the whole history of investing that you guys missed? What are they going to say? Dang, yeah, we missed that one. They're going to say, it's stupid. It's stupid. And they're going to go to their grave saying it's stupid. And their grave will be financed by people that made money in Bitcoin. We'll see. You know what? What will be very interesting, and I'll just leave it at this, is when the turnover happens and the kids take over. The younger VPs that I bet there's a very interesting shift, a sea change at Berkshire Hathaway. We're gonna see. That's gonna be fun to watch.
That is gonna be interesting.
All right, so let's wrap this up with final thoughts. Britta, final thought, then we'll go to Nick. As you conclude your final thought, I'll take you off camera, put you into the green room. Britta, to hang around because we do an after show, Nick, that nobody gets to see, but we do it amongst ourselves. So when we do your final thoughts and I put you in the green room, please, if you can, hang out because we always have a conversation afterwards. Britta, final thoughts.
Final thoughts. I am actually starting to look into the traditional market just to see if there's anything I can pick up. So I guess I'm not as skeptical as I thought. So yay.
Well, I'm gonna on your final thought, I'm gonna tell you, hang around in the green room. If Nick does hang around, he'll get to share. If he doesn't hang around, Brady and I will talk to you because I know you want to learn how to trade. Well, yes. Nick has a crypto trading strategy where they use options instead of trading a stock back and forth. You're actually trading options on the stock back or forth. And the stock in this case is Bitcoin. So hang out for that. I think you'll really dig it. Mr. Black, final thoughts.
No, I think final thoughts. I think just reduce it to where we started tonight's episode. I think everybody should do the balance sheet exercise. I don't know how many people you had on the show. We can't see from this end, but I think
steady around 50, about 50 participants watching.
I'm just hoping that half will go and do your little balance sheet exercise, income, expenses, assets, liabilities, and determine your cash flow. It's so important, man. It's so important. And I'm telling you guys, do it and be honest with yourself and at least know where you stand. And then you can make a game plan and show me your boobs. I like my 11-cent Cardano. I like Bitcoin up. That'd be a whole other tangent. Anyway, I would just say, check your balance sheet. Please do that. It's an invaluable exercise. You'll get a lot out of it.
Right on. So I want to put Nick in the back and bring Brady, the man behind the buttons.
Pushing the right button there. That's my mute mic.
Right on. Brady, final thoughts on tonight's show. What'd you think? I saw a lot of engagement from the audience. We held about 50 strong participants the whole way, which generally leads to about a 350 to 450 total count if trend continues. So what was your thought on the content, on the guest, and what you might have as a takeaway?
It's only going to get better from here. I've noticed I wouldn't say a lull, but I think our increase in interest, and I'll speak for myself, but I think I'm getting a lot more out of what we talk about. And it, ironically or not, or maybe this is why it's so helpful for me, it's actually coinciding with things that I need to learn and do and figure out, because as you said, this just isn't for me right now. It's also for future generations if I so want to taken that direction. So I think knowing that there are a lot more people with that in mind and wanting to achieve things, it makes it a lot easier, and actually gets me to my next point. All the new people that we've seen, it makes it so much more enthusiastic to include them in our conversation, because then that just means we get more perspective on things. And that's where these conversations are going. And that's why it's so interesting to talk to these people after after they're on here, to talk to them privately, sort of. It's very, very enlightening.
It is. Thank you. Right on, Brady. Folks, my final thought, it kind of always seems to come back to this one kind of theme, and that is, what can I direct my eyeballs to, whether it be the written word or some piece of video content, that I can tomorrow be a better investor as a direct result. So I have had the good fortune of being exposed to a tremendous amount of content. And it's funny to me that I look at where my eyeballs are being directed today versus where they were being directed 2 years ago. Who do I subscribe to today? Am I still subscribed to folks that I was subscribed to 2.5 years ago? That doesn't mean anybody's good or bad. It's amazing, this evolution, this growth. And I have found through so many of you that consistently come and participate, whether it be on the live stream, in the chat, or through the comments of the videos. Thank you so much. It seems like we really are building a little community here. So many of you have taken time out of your day to reach out to me privately. I've been grateful for that. Matter of fact, I missed one today. Lori, I'm absolutely apologize. Let's get that rescheduled and get you back on board. But I find myself grateful. I'm grateful the community that we're growing. I'm grateful the content that I'm getting, because I'm learning so much. And I actually look back at 2.5 years ago. I am not the same guy. The information I work with today is much different. And I think I'm better off as a direct result of it. I think the tally sheet, the balance sheet, will tell me if I'm successful or not. And so far, especially today, the portfolio is growing. And that to me rings of success. And I want to be successful just like you do. So folks, thanks for tuning in. Thanks to our guest, Nick Black. You can find him religiously Monday through Friday on his crypto channel, Crypto and Coffee, right here on YouTube. Bitta, our lady on the street, thanks. Brady, producer extraordinaire, and all you ladies and gentlemen that make this show happen. Pura Vida, and until next time, ciao.